we're dealing with the last part. So considering this, if I just scroll down to the last part, the fifth unit, I'll just zoom it for a reading purpose. The fifth unit, again we have theories. And if you see the theories, it talks about the Walter model, Gordon model, and again the Moodle and Miller. So in the second unit, we have net income, net operating income, signaling theory, trade-off theory, and Moodle-Miller. Again, you meet the Moodle-Miller in the fifth unit. As per the syllabus given, they are not asking any numericals on these theories. They are asking numericals on PV18 EPS analysis, or mostly the numerical will be on cost of debt or cost of equity based on WACC. So we'll focus on the same. When I finish all the units, I will first take the numericals on EVA because that is a new technique. And after EVA, we'll talk about how to deal with other chapters. In case of second unit, the major importance should be given about understanding the concepts because even though you forget formulas, it is very crucial for all the students to remember the formulas and sequences. In examination, it is not more important that you write a formula of Moodle-Miller. It is important that how you illustrate the Moodle-Miller. He has given three equations. First, debt is constant. Second, equity is important. And third, everything is moving. So, existence of tax, everything is moving. All these things we need to take in cognizance while explaining the same. So, while writing in university examination, please refer the what equation they are asking about. Suppose the question is for 10 marks or 5 marks or 2 marks, and they're talking about second proposition, they're talking about the first proposition, they're talking about the third proposition. So while dealing with the proposition, we should be very clear and understand what the question is. If you're writing the equity is constant and debt is moving, it will not be first, it will be second. Sorry, first. And if you say debt is constant, equity is moving, it is second. So accordingly, please prepare for your examinations. So far we have covered the 70% of second unit. Now let's talk about the remaining part. Now we have to discuss about the three important concepts. What are these three concepts? We have to take out PBIT and EPS analysis and maximum time. The numericals in second unit are asked on MM approach and PBIT EPS analysis. Even though in second unit it is given as ratio analysis, sorry, leverage ratio, maximum time leverage ratios are not asked, and even though they are asked, the percentage of repetition is very low. So here in this case, we need to talk about EBIT and its analysis. Okay, what is PBIT? Anybody know the meaning? The P stand for profit, B stand for before, and I stand for interest and tax. Whereas the EPS here given, it talks about profit before tax and interest. When we compare with earning per share, I will get the value which a company shareholders are interested to buy. So even I have profit, but what is value added to me is a value creation to the customer, and how I create this value will determine how I'm focusing about. So let's start the chapter. PBIT to EPS, it means the profit before interest and tax to EPS, that is earning per share, I'm comparing the value. Or, in other words, what I'm doing is I'm just taking care what is difference between PBIT and PAIT. The earning per shareholders is nothing but the profit which is available after paying earning and tax. And PBIT talks about profit before earning and tax. What is the relation between them will decide how much the shareholders are interested to invest my company. If I can maximize the difference, it means I'm paying higher interest and tax. If I minimize the difference, it means more profit is available and less operating expenses are applied. So, considering the same, I need to evaluate and think what is the analysis and how we are moving forward. See. So, let's continue. The profit before tax is the purest signal how well the business is generated. Because many times, what we study in books of accounts, that is, gross profit is nothing but your net profit. Sorry, gross profit is nothing but profit before interest and tax. So, talking about the growth or production activities, the PBIT indicates how well I'm managing my resources and creating or earning revenue from available resources. The profit before interest and tax is funds which I have created from operation. It is income which I generated from operation, or it is use of resources and creating the economic value for the investors. So, in short, I can define the PBIT is a gross profit which I have, or the profit which I earn out of my regular trading activities. It can be goods or it can be a service. Whereas earning per share is a key matrix which is used to understand how much gain I'm having if I'm investing in any shares. The earning per share indicates that the profit available for equity shareholders divided by market price or quantity. I can use alternate both formulas. And these two are the indicators of organization performance. Now, why here the profit after tax is not important? Because profit after tax is relatively non-operating expenses. So when I compare the operating and non-operating, simply I can find out the admin expenses. But as a financial engine, the investors and the dealers, they are very regulate and concerns about understanding how actually the firm's operating profit or profit from trading activities is giving output to earning per share. The second reason of this analysis that if my regular activity is a trading XYZ commodity, how much I am doing efficiently, and out of that, how much is earning a shareholder have. So that will give an idea about my financial efficiency and focus of my engine. If I consider the net profit, it is many times has certain adjustments like depreciation, income from other sources, prepaid and postpaid, and so on. And that may lead to the Non-accrual incomes, which generally more about admin plus non-admin charges. And to avoid the same, it is considered to follow the PBIT instead of profit after interest and tax. So we compare the both scenarios and understand how the firm is efficient or how the firm is making the progress. The income statement is always a variety of contents, like I shown the diagram of our body. And anatomy of profitability is always being indicated by this income statement. How much is my admin expenses? How much is my trading expenses? How much is interest? How much tax? What are the different provisions? These all are the indicatives by income statement. And a company's true earning power is nothing but earning per share. Now, when we talk any firm's growth, we always recommend the turnover. We always talk about its profits. We always talk about the volume the company has traded. So, while talking about the growth of firm, we are concerned about the profit, we are concerned about the growth, we are concerned about the expertise to achieve the new market and market share. In every business aspects, the three things are important. One, their turnover. Second, their product range. And third, their long-term plans. So in all these three concerns, it is always crucial and essential to first understand the sale is a lifeline of any company. How much sale I generate, I can talk about how much growth I'm having. Maximum the sale, maximum the income, and maximum the growth. The sustainable profit after the sales is my achievement. There are two things how I can manage my profit. One, by reducing the cost of operation, and second, increasing the value of margin. Suppose my margin value is hardly 10%. If I want to increase the profit, I need to reduce the cost, or if I want to increase the profit, I need to take in consideration the quantity so that the more quantity I sold, more profit I earn. So sale is a lifeline of any company. What is PBIT? PBIT, as I say, it is a profit before interest and tax. So this is considered as the organizational benchmarks because here the dividend, short-term investment, return on short-term investment, or debt loss, these items are not included in gross profits. Now, to remember for your study, please remember the gross profit is your profit before interest and tax because all the liabilities of admin we are adding after PBIT. So PBIT is not exposed to interest or some provisions like depreciation, general reserves, and so on. So it is a true value which is generating what is my profit and how my business is done. For any business, the efficiency talks about its core values. How much product, how much output, or how much productivity I am creating out of my core business activity. And this is being studied in PBIT. The important factor of PBIT is it talks about the movement of products. It talks about the positioning of product and simply it analyzes where the profits are shared and where the income is generated. Many times we are involved in some activities, but the returns are compromised. We have the large sales, but the profit is compromised because we are attracting non-operating expenses. And to avoid this, the PBIT EPS analysis is a foundation for understanding the firm's profitability. So, any doubt in meaning of PBIT? I guess there is no doubt. So, let's move on now. Before I move out, let me cover PBIT and EPS is limited approach depend on the firm's applicability. So let's continue our journey. And now I clear the meaning of profit before interest and tax. Now let's understand the importance of this concept. The cost of goods sold is a basic parameter to talk about my financial efficiency. If I can make the product in less price and sell it higher, it will give me profits. Whereas if I creating a product with high cost and there is very less margin, then it becomes more risky because in this case, I need to negotiate. I need to have more and more quantity sold because the large quantity will give me the profit margins. And in same regards, when I have less margins, I need to strict control my cost of capital. Similarly, when my cost of goods sold are involved in various different non-productive things, then it will impact the expenses and suddenly the internal revenue generation or adjustments are not feasible. And considering this, we always need to manage the operational and non-operational expenses separately. We should focus on the whatever the cost of goods sold, it is minimized and the margin of profit should be higher. Second, we should not have a higher borrowing cost or operating expenses, which will directly make an impact toward my profitability. The scenario of income generation should be compromised if the profits are having higher cost of expenses. We should always talk about the average cost of expenses and the gearing of same. When we are dealing in competitive environment, we should remember that how smartly I can manage my business. That is my example. Now, smart business mindset start with managing your expenses. In any business, increasing income is a very tough idea, but reducing expenses is a smartest idea. What I can follow or utilize. Tomorrow I want 20% profit. So if I want more profit, I need to have more sale. But sale is an dependent factors where I am using the sale as relative business where the sale is considered as their number of customers, their taste, their preferences, commercial laws, and so on. But if I want a profit, and I control the cost of production. I manage the resources. I do the innovation in components of product. Simply, I can have the profit. So, how effectively I manage my internal resources? That will be an analyst example how well I'm managing my business. Because more example, more managing my expenses, I have more gap between the sales price and the expenses. The more the price, more the gain I'm having. So let's move on. Now, tax and interest, these are two factors which are non-avoidable. They are going to be purview under any circumstances, and my liability for them is going to be scheduled as per my productivity, growth, or number of units I'm produced. So tax factor is unavoidable, unnegotiable. So while managing the firm's value or growth, normally the tax shield is ignored. We consider that these are default payments which the organization is going to do. So when I'm talking about the profit management, I certainly cannot control the profits because even though I have a zero production or I have thousand production, based on my profitability and turnover, my liability for tax is going to be there. So this liability is simply unavoidable, and hence the tax and interest, these two terms, are being ignored while doing valuation of any firm. And basic focus is PBIT and ROE and ROI because this analysis will help me to actually understand how much growth I am making. So in any firm, what we do is we will first find out from operation the profit before interest and tax. Then we will deduct from the same the interest and other liability of borrowed capital. What is the funds available? We will estimate the tax shield or tax I need to pay, and then I'll pay the tax, and ultimate the final things are my income. So when you're talking about the net income, I am moreover talking about the money which is available for shareholders. But when I say cost of debt and tax, actually this debt is also part of my equity, sorry, part of my ownership. So instead of PABIT, if I consider PBIT, it will give me more correct picture of firm's growth. Let's understand the EPS analysis. The formula for earning per share is net income divided by weighted average shares outstanding. Here, the shares outstanding is not something like income outstanding. Here, the shares outstanding means how many shares I have issued or the quantity of shares which are subscribed and paid by the different investors. So, to give an example, suppose I have the income is 1000 and there are two types of company, company A and company B. Company A has 1000 profit, but the shares they have is 1000 and B company has 500 shares. So 1000 shareholders achieve the 1000. So formula is 1000 divided by 1000, my answer will be 1. So in first case, my earning per share will be rupees 1. Take the second example. In second example, my outstanding shares are 500, but they are generating income of 1000. So it means if I divide the 500 to 1000, my earning per share will be 2. So higher the earning per share, the returns for each share will be more. Suppose the share value is 10 rupees in both the cases. It means on 10 rupees, the firm A is earning 1 and firm B is earning 2. So it is 20% return in case of firm B and it is 10% return in case of firm E. So this way, it becomes very easy to take the decision for investor. If you forget the formula in examination, the best way to remember is it is called EPS. So earning per share. So how will I find out earning per share? When I know what is total earning of firm. So assume that something is given as total profit, something is given as total number of shares. So I just have to find how much one person can have. It's very simple. Income divided by shares. When you visit any bakery, or take a better example, you have just started an activity to sell cup of tea. Suppose whole day you sell 100 cup of tea, earning 100 into 10, 1,000 amount. But you know that after each cup of tea, your earning is 3 rupees. So I will find out. So I multiply 3 into 100 and my earning per cup of tea, sorry, earning in total will be 300. And same way, we are calculating the EPS by dividing net income with weighted average shares outstanding. Please read the formula. I'll just erase my drawings. Here, the earning per share is final income available for shareholders divided by the liable shareholders who supposed to get their income. And this way, we calculate income from the business which they have earned, and this income is considered as benchmark for analyzing how much productivity I'm doing. There are three dilution effects which will dilute the EPS. Now, dilute means if I have a concentrated chemical and if I want to avoid the concentrated chemical, I will involve some mixture so that the concentrated combination is reduced. So dilution of earning per share, it means how the income per shareholder can be reduced. So the dilution effect normally asked in exam. So if you want to just memorize, it is equal to when my earning per share is initially 100 divided by 10 was equal to 10. I want to dilute. It means I'm interested to reduce the earning per share further down. So when I want to reduce, the bottom part is need to be reduced. Sorry, the bottom part need to increase and the upper part need to fall down. So either have one effect of increasing the shareholders, second effect of reducing the profits, or the third effect, the combination of same. So considering this dilution, we have first thing, if number of shares are more outstanding, that is what saying, if the number of share where I divide, they are more outstanding, then instead of 100 divided by 10, I consider as 100 divided by 20, and my answer will be 5. When I go to the second, dilution of securities, the dilution of securities talks about the giving the option to convert in other formats. Either I pay the shares or capital, convert it into debentures or bonds, or split the shares into bonus shares or right shares. In this dilution, what I'll do is I'll just reduce the profit available. So now my shareholding will be 10 shareholders, but the profit available will be 50, and this will reduce my answer as 5. So earlier it was 10, and now my earning per share is reduced to 5. In fully diluted form, I have the combination where the it is 50 divided by 20, and my firm's value will be 2.5. So when I reduce in shares, sorry, reduce in profit, it is dilution of securities. When I increase number of shares, it is dilution of shares outstanding, and it is considered as full dilution effect when I have used the combination of 1 and 2. So this is called a dilution effect of earning per share. In examinations, this was a repeated question in theory. Explain the dilution effect of EPS. So this is the concept. Anybody has doubt about dilution? Just put in chat box. I'll wait for a few seconds. Please read the slide, understand the meaning. I'll just erase my graphics. Understand the meaning because this is a crucial concept in PBIT EPS analysis. I hope things are clear. So let's move on. We'll skip this part. Yes. Let's talk about debt or equity and which finance is essential. The interest is the lateral part of EBIT. which talks about the tax shield. More the borrowed capital, less tax is liable to pay by the firm because we are paying interest and that interest is a fixed obligation to reduce my profit. Whereas if I hire equity financing, I am being disclosing higher profits, ultimately inviting more and more tax liability. So it is always said to have the optimal mix of borrowed and owned capital, which will generate the profit after tax more efficiently and avoid the tax burden on a company. So while earning per share, we need to take in cognizance of C, but earning per share is given by PBIT analysis more deliberately. So in that case, we should take in cognizance to avoid the equity financing, sorry, debt financing, which has heavy cost of interest. So we can take a debt, but the cost should be less. The application of PBT analysis is done for financial plans, for calculation of EPS, for defining the scenario of firm's growth, and identifying the different points which is across the PBIT EPS analysis. I'll illustrate this in coming next one more PPT. So let's keep this point. And what I'll do is I'll do one more PPT share with you. Okay. Now I'll share the illustrative PPT where I'm just trying to illustrate the PBIT in EPS analysis using some four examples. Now we talk about what is profit before interest and tax. We talk about what is earning per share. Now let's take example how this analysis actually works. So we'll use in this discussion how the PBIT and earning before interest and tax is a fundamental benchmark which is used for comparing earning per share and challenge the firm's growth or working. So in PBIT and EPS analysis, we'll just check the operating profit and the final earnings available to its shareholders. In this case, we are talking about I have created a pool of money. I have created a pool of money which is generated out of my sales. How much this pool of money further progress by adjusting the first is interest and then by adjusting the tax and then how much is available for shareholders as EPS. So let's have the illustrative example. The EBIT and earning per share, sorry, I use the word EBIT, actually earning before interest and tax and profit before interest and tax. They are one and same word. We can just interchange. Is a capital structure decision where how much the earning before interest and tax and how much it delivered if we compare. we come to know the operational efficiency and control over the resource of production or service which we are delivering. Higher the control over the cost and more the production or output of service will definitely have higher returns. In reverse way, if I have less control, then even I earn the higher profits, my income generation will be poor and reduced. So let's understand how we do it. The in first step, we have to find out the financing options, whether it is equity or whether it's a debt or it's a combination of equity and debt, and what is the percentage or proportion of this combination. In second step, we'll talk about the range or level of EBIT depend on the scenario. Now, this scenario talks about average EBIT across the firms and their growth. The third thing, we will try to compare and understand whether the firm is progressing or not. So, by means of comparing the EBIT and EPS, we can talk about the growth of firm. So, let's go to the example part. So, these are the steps we are going to follow. Please go through the steps. The first, we'll find earning before interest and tax. We'll reduce the interest. Then we have profit before tax. Then we reduce the profit before tax. And we have earning per share. So, in this analysis, where I'm comparing EBIT and EPS, I'm starting the journey from EBIT. So, the words are E, B, I, and T. So, we'll first take care to eliminate the I, then we eliminate the T, and what we finally get is earning per share. And this is your EBIT EPS analysis. So they will ask you the questions on C. So let's start the calculation of EPS. First, find out all the financial plans. Second, find out the structure of debt, decide the interest rates, apply the tax rate, and after dividing the shares, I can find out earning per share. So I'll just wait few seconds. Read this slide because this is the foundation of your EBIT analysis. Hope you are done with the reading. Now let's proceed. Okay. Let's talk about the first example. Higher number of equity shares are issued and there is no interest burden. Then EPS has a strict growth and steady but diluted across more shares. So we have the first thing where there is maximum equity, and second setup where we have the debt and very few equity or negligible equity. In first case, when I have higher number of shares and no interest, then my EBT, that is earning before tax, is equal to my EPS because the tax is only the concerned area I'm going to consider. When I have more earning, I required more liability to pay as a tax. When I'm paying more liability as a tax, ultimately I am charging and I'm losing unnecessary things. So let me illustrate the same. I have profit of 100 and there is no debt. So no debt, no interest, then profit available is 100. So my entire amount of tax will be on 100. Suppose the tax percent is 40%. So my income will be 60 rupees. In reverse side, when I have tax, what I'll do is I'll use the debt. Suppose out of 100, my debt is 30. Then 70 rupees are available to shareholders. But when my income is reduced, my tax percentage, suppose it is 20%. So I'm paying 14% rupees tax and 56 rupees are available. So here, having the debt will become your tax sheet. In case more the debt, it again not a welcome because more the debt, it will more the realizable value and considering the same. The more debt will also give an impact about the profitability and indicating the burden on EBIT because instead of 100 rupees income, if debt is high and I'm paying 90 rupees for interest, only the few part available profit is remaining. And if the profit is reduced, then equity shareholders will take a call not to continue the organization. They can postpone or they can shuffle their investment in company. So optimization of profit or the shareholder value is depend on the combination which we are using. Not too high, not too less, but the aggregate pricing and positioning of capital combination of equity and debt is very crucial for firm's value. Higher debt or lower debt, this cannot be said a true solution for every issue, but rather we should focus on how the firm is using combination or their proportion to use at tax shield and maximize the EBIT. So the dominance of equity or dominance of debt can be there, but the mixture of these dominance should be in proportion when earning per share is maximized. If earning per share is negligible and I have higher debts, ultimately this will result in sunk cost, ending the firm's obligation and the more productivity and result in shutdown of the business. In this case, if the business wants to grow, they will extend more borrowings and continue for more and more things. So when they extend more borrowings, that will attract more cost and result in more accumulated losses. So overall, when I do not manage my equity and debt properly, I am resulting into my loss, and this loss will be the one of the reason why I'm going to suffer. So this was the example number one. Then we have the walkthrough of example one. It's 8 o'clock. We'll stop for the day. Next session, we'll discuss the examples. Then we will talk about leverage ratio and one more analysis. After that, we'll finish your second unit. One more declaration. All finance students under my mentorship, they will not have online meeting except 5 students. All these students need to come on Saturday after 11 a.m. and declare or discuss the progress in person. The online meeting for defaulters who are not attending online meeting will not be conducted. And if the students are not reporting, now consecutive 4 meetings, the students is absent, that is minimum 2 attendance is not there, I am not going to accept the OGT. Thank you. Now you can log out and join the other meeting.